Apple, ticker AAPL, is a stock we're going to analyze today. Now, what are we looking at going forward? What do we expect to happen with Apple? So as of right now, to be honest, it is actually in a bit more of a tricky area to trade and not something I would personally be touching for the time being. The reason for that is we became extremely overbought here and here. And what happened, obviously, your average would be roughly here. That provided a great short into the normal trade plan of statistical mean. Again, we covered this in the Tesla video that just went out before this. If you want to see it in a cleaner example, because this wasn't super clean. Anyway, we came into mean, you run into first deviation, you come back, you test your mean, and we're running again. So whenever we're near statistical mean, to me, I'm more of a mean reversion trader. So when we're at the mean, I've got no trades. So to me, I'm not looking at anything on Apple. So what I'm really looking to happen on Apple is we break highs. If we can break highs on Apple, this is where we can get our breakout move. Again, I'm a reversal trader. I'm not going to trade the breakout, but I know people like breakouts. That will be the first opportunity, because not only will it be breaking from highs, it will be breaking through its first deviation, which will definitely be a stop hunt of both highs and deviations. So if we can run out of here, really coming from 250 and above, this is where I would look for some new short opportunities, because at that level, you're going to see most likely that Apple will be trading at a divergence. Obviously, we're breaking all-time highs. 250 going to be near your first deviation from a 6-month perspective. Right above that, you have your second deviation from a 1-year level. So really in that kind of range from 246 to 255, you got the big 250 psychological level, you got your deviations at play, you'll be breaking highs, and again, we'll most likely be trading at a big divergence. So there will be a lot of reasons to show momentum is slowing and a reversal is likely. So that's what I'd be looking at as kind of the immediate game plan on Apple, kind of looking into the next few days or weeks, depending if Apple can continue this upward move. Again, if we stay where we are now, to meet no trading opportunity. The main trade plan for me is if we break into highs, we are looking for shorts. Now, again, like I said, not any trades where we are right now. I don't care. The only other trading opportunity is obviously we're kind of being in that range. If we break out of this massive range and we can break to kind of the bottom of this bound, 196, that is your year-to-date anchored VWAP. So again, that's an anchored VWAP from Jan 1st. And that tracks kind of what fair value is at the year. Really, I never want to be buying a stock above this level. We like to buy at or below that level. So 196 will be a nice entry for potential long bounces, because what is 196? That is our year-to-date anchored VWAP. So that's your first reason. And then if we go over to this chart, that's going to be your first deviation, because that's at 197. That's our first deviation from a 1-year time frame. So two key reasons to enter. And again, this will kind of give the indicators kind of time to reset and everything like that. So really, that's the kind of key game plan I have on Apple. Is I wouldn't even touch it where we are now. I would just be patient, wait for a directional move. I think the upside move would definitely be cleaner, kind of that 255 to 245 short area. That would be the nicest setup to kind of trade back down to kind of 230, 215 area. And on the other hand, if we end up breaking down, then again, long is kind of around 195 to 197.5 will probably be the nice long bias opportunities I could see on Apple. So that's more what I'd be looking at, either shorts if we kind of break up, longs if we break down, which I guess is simple enough. It's just being patient on a move like Apple. It's got quite a big range to kind of break out of as of right now. So until we can come down to 195 or kind of 245, which again we haven't hit any time recently. Last time we hit that was kind of June, so it's been about 3 months. So again, until we kind of break out of that 3-month range, to me, no trades. But once we do, good longs, good shorts, that's what I'll be looking at. So one last thing I'll cover as well, the upside move as well would be a lot nicer, because if we do fail on that short, the nicest opportunities will come when we come back into these green third deviations again, which is 275 and above. They'll always be the cleanest of the trades and the highest probability ones to work out. So if we ever come up to these range, that's where I'll definitely be looking at heavy shorts. Again, this is going to be a smaller size short because you're playing at lower probability setups. But 275 and above would be lovely shorts. But again, that's quite a way away, so that's why we're talking more about that 245 to 255 short game plan. But again, I would never use as much size on that as I would on that short, just as a heads up. Anyway, I hope you enjoyed the video. Hope to see you next one, and that's it. Peace.